Hello viewers, my name is Chandrasekhar. Today I am going to discuss about provisions of section 194M of the Income Tax Act, which was introduced in Budget 2019 and it's applicable from 1st September 2019. Before going into the provisions of the section, we try to appreciate the rationale behind introducing this section. The section was introduced for the purpose to cover some specified high-value transactions in personal nature under the provisions of TDS, which earlier was excluded from the TDS provisions. What excluded to mean is, if you see the existing provisions of section 194C, 194J and 194H, the provisions are not applicable to individual or HUF who are not required to get their books of accounts audited. That means, if an individual or HUF who are not liable to tax audit under section 44AB of the Income Tax Act, they are not required to deduct TDS on high value transactions in personal nature entered for contractual work, professional services and payment made by way of commission or brokerage. This creates a way for escaping these transactions from TDS provisions. To plug the gap, the section 194M was introduced. Now let's look into what section 194M says. It says the provisions are applicable to individual and HUF who are not required to get their books of accounts audited, and if they made any payment to a resident contractor for carrying out any contractual work, or if they made any payment to a resident professional for providing any professional services, and if they made any payment to resident by way of commission or brokerage and the sum exceeds 50 lakhs in a financial year, then the individual or HUF are required to deduct TDS under section 194M. Here the work means work as specified under section 194C and the professional services means as defined under section 194J, and commission does not include insurance commission, and the section is applicable only to resident. It does not apply to non-residents. Now let's look into scope and applicability. Section 194M is applicable if individual or HUF are not required to get their books of accounts audited. That means if an individual or HUF are liable to tax audit under section 44AB, then they need to comply the provisions of TDS as per existing sections. That means if individual or HUF made any payment to contractor, they have to deduct TDS as per the provisions of section 194C. And if they made any payment covered under section 194J, then they have to comply the provisions of section 194J. And if individual or HUF made any payment by way of commission or brokerage, then they have to deduct TDS as per section 194H. Now the next question is rate of TDS. At what rate TDS need to be deducted? TDS at 5% will be deducted under section 194M if the total amount paid to a resident exceeds 50 lakhs in a particular financial year. In case the failure of payee to furnish his PAN, then TDS will be deducted at 20%. Let us understand the provisions of section 194M with the help of an example. Suppose Mr. R provided catering services of 48 lakhs and professional services of 32 lakhs to Mr. C. The agreement for work entered on 16th August 2019 and the payment of 80 lakhs made on 15th September 2019. Now, as per the provisions of section 194M, Mr. C is liable to deduct tax at the rate of 5% on the entire amount of 80 lakhs, assuming Mr. C is not liable to tax audit under section 44AB. Even though the contract is entered before 1st September 2019, TDS has to be deducted since the payment is made after 1st September 2019. Now let's take another case. What if Mr. C is liable to get his books of accounts audited under section 44AB? If Mr. C is liable to tax audit under section 44AB, then there is no requirement on Mr. C to deduct tax under section 194M, as he is required to deduct TDS as per section 194C on the amount of 48 lakhs and TDS as per 194J on the amount of 32 lakhs. As per the provisions of section 194M, tax has to be deducted at the time of credit or at the time of payment, whichever is earlier, and the due date for depositing TDS is similar to existing provisions. That is, if the amount is paid in the month of March, then the due date for depositing TDS is on or before 30th April, and if the amount is paid in any month other than March, then the tax has to be deposited within 7 days from the end of the month in which deduction is made. Now we discuss about procedural aspects, that is how to pay the TDS amount to the government. The government has introduced a new form called 26QD, which is a challan cum statement. The payer with the help of form 26QD can make the TDS payment to the government. The payer can file form 26QD with his PAN without applying for TAN. The payer can apply for lower deduction certificate under section 187. Suppose in the above example, Mr. C has to deduct tax at the rate of 5% on the entire amount of 80 lakhs, which comes to 4 lakhs. assuming Mr. C is not liable for tax audit, and Mr. C has to deposit the tax amount of 4 lakhs to the government on or before 7th of October, and the same will be reflected in 26 years of Mr. R. This is the entire summary of section 184M. Thanks for watching.